In a couple of hours, the MPC decision will be known, and do remember that we have an extended business incorporated which will accommodate that session with a panel of discussants, and that's at 1:30 p.m. For now, we discuss expectations from that meeting and other burning issues at Commodities Markets Updates with Damilola Akimbami, a research analyst with Financial Derivatives Company. Good morning, Damilola.
Morning.
Thank you for joining us.
Good morning. Thank you for having me.
So is your heart beating now for just a couple of hours? What's your expectation?
Oh, well, there are three likely scenarios. One is for the MPC to maintain status quo. The other is for them to increase or to reduce interest rates. Now, we know that some of the major considerations will be, one, the sluggish growth numbers, which were released at 0.51% for Q1. We know that April inflation numbers also dipped marginally to about 18.12%. So these two definitely will be some of the considerations. The CBN also is going to be looking at the illiquidity in the money market, also the exchange rate stability in terms of the forex rationing, how has that impacted on exchange rate. And we know that now the CBN, at least either late last night or early this morning, has included the NAFEX rate, that's the Nigerian Autonomous Foreign Exchange Rate, on its website. So now the inflationary pressures definitely support or justify a tightening of interest rates, while the sluggish growth justify or support an ease in interest rates. But we're anticipating or expect the MPs to leave rates unchanged. And while we're saying that, because the CBN of late has adopted a cautious approach towards monetary policy, and it wants to see that this growth that we're recording is strong enough and robust enough to accommodate a tightening. So if at all we're going to see the CBN continue to use its traditional means of monetary policy, by that I mean selling maybe more open market operation bills, more treasury securities in the market. And we've seen that so far the liquidity position of banks has been really tight. We've seen interest rates average about 15% compared to about 3% in January. So we expect that that's going to continue. And now that the NAFEX rate, which is around 410, is a reflection of the I and E window rate. Now that government transactions are going to be carried out at that rate, fuel imports, all transactions, official transactions are going to be carried out at that rate. You're also mopping up liquidity, because now at 410 compared to what it was at 380 naira to a dollar. So that's another way the CBN is going to use, or another means the CBN is going to use to manage liquidity in the system. So I think that they're going to leave rates unchanged. Status quo.
Okay.
Again, yes.
Anyway, the oil sector declined by 2.21% year-on-year, while the non-oil sector grew slowly by 0.79%. Is the country on the diversification, path with this happening?
Well, first of all, GDP can be measured using the output approach, using the income approach, and using the expenditure approach. So these numbers that we're looking at are the output approach. So in terms of activities, what is being produced in the economy, Nigeria is well diversified. If you even look at the numbers, the non-oil sector actually contributes more to GDP output than the oil sector. The oil sector just contributes about 9% and is growing about a negative rate of about -2. But more importantly is the revenue. What are you earning? Because that is what will drive investment. That's what you're going to spend to fund your capital projects. Now, in terms of revenue, Nigeria is still highly dependent on oil, and that is where the major issue is. And if you even look at the FAC allocation, the monthly statutory allocation, it declined. What was shared in May declined to around 616 billion from about 680 shared last month. And why? Because of the decline in statutory revenue. Even oil and gas royalties also declined, and we saw a decline in VAT. So what we're seeing is still, the country still depends on oil, but a lot of efforts are being put into growing the non-oil sector, and that's what we're seeing also the likes of VAT, despite the decline in collection, but at least that is beginning to play a more important role in the revenue base. So that is the issue. So Nigeria, we're on that path, but we're not yet where we want to be or where we need to be in terms of revenue diversification.
That path? That's another thing.
So we also saw that the GDP was primarily driven by agriculture and industry, and this should be good when you compare the pandemic, the effect of the pandemic, and then the insecurity. That means without these two problems or challenges, it would have been much, much better if in the midst of this, we still have these industries and agriculture driving the growth.
Yeah, so agriculture has remained one of the few sectors that has been resilient, even amidst the pandemic and insecurity. And if you look at the breakdown of the GDP numbers, you have services, industries, and agriculture. Services still account for the largest component, then agriculture and industry around 22.3%, 22.2%, so roughly around the same. And like I said, agriculture has been resilient. So if there was no pandemic, if there was no insecurity, most likely we would have seen better numbers for these sectors. But then again, it would be premature to say that the economy is, or the impact of these events have worn off the economy. Pandemic, yes, we're slowly recovering from that, but insecurity is still a major threat all over the nation, and that coupled with the other fundamental issues that are occurring, so planting season, even the forex issue that has led to high imported inflation. So all these are playing into commodity prices and continue to impact on numbers. Now we're in the peak of the planting season. So when the Q2 numbers come out, you're going to see that impact on the agriculture sector. But bear in mind now, comparing year on year to what happened in the second quarter of 2020, and bear in mind that was the peak of the pandemic, and we recorded a minus 6.1% growth rate in Q2 2020. So because of base year effects, you see that GDP numbers for Q2 would be slightly better, even if it's just because of that base year effect.
Okay, but when we place a GDP figure alongside price movement in the commodities market, what does that tell us?
Yes, so we've already talked about agriculture, we've talked about oil. These commodity prices, we produce, but not enough, so we still import most of what we consume. And we know that globally, food prices are also increasing, which has even become an issue for global monetary authorities, and that is feeding into our domestic commodity prices. So for instance, if you're having the global price of wheat trading high, that would feed into, obviously, flour-based products and commodities. So if you take that coupled with the fact that we still have low total factor productivity in Nigeria, meaning that we are not utilizing all the resources available to yield the optimum level of output, our potential output growth level compared to what we are growing now, I think our potential output level is about 8%, meanwhile we are growing about 0.5%. So there's a recessionary gap. So we're yet to unlock those resources, which will translate into the optimal growth that is required. So there's still that disconnect between the high commodity prices and the low growth rate we're seeing.
Yeah, and when you talk about the potentials in agriculture, yes, we tend to forget the value chain, the preservation. You know, if global food prices are high now, this might be a good time to tap into it. If we can do packaging and preservation and tap into, you know, it might be a way to also increase our revenue.
I agree with you. As in one of the issues, so one of the issues that has also affected commodity prices is the supply chain disruption. And part of that, you're looking at the processing, you're looking at the packaging. A lot of these goods are transported from the north to the south where the market is, and most of them, especially the perishables, are lost in transit because of poor packaging. And also, there are a lot of opportunities in the processing value chain, which we are yet to unlock. So I believe that, especially for the agricultural sector, because we have the land, we grow most of these commodities here.
We have the weather, we have the land, we have the people.
We have the people. So, yes, so investing in across the value chain definitely would contribute to unlocking the opportunities in these sectors, especially agriculture, because Nigeria is yet to reach that level of food security, and that's why we still import a lot, and it's affecting our food prices.
Now, some people say we import a lot because of Nigeria's taste, Nigerians' taste.
Yes, for some commodities. So if you're looking like wheat, I know there was a time we talked about wheat. And all that. So definitely because we import the hard red winter wheat from Russia and from the US, and the quality of that wheat is totally different from what we grow here in Nigeria. So definitely for you to get Nigerians to switch to the wheat that is being grown here is going to be a tall order. Remember when we had that issue with cassava bread, and that didn't pan out. So definitely, yes. So for some commodities, tastes would factor in, but then still there's still other commodities that we can grow and we can leverage on if we have the comparative advantage to do so.
All right, I see the reserves are down by at 34.3 $35 billion.
Drip, drip, drip.
Drip, drip.
Yes. We've been seeing that happen, and we, over the past couple of weeks, despite the fact that oil prices have been high, about $67, $68 per barrel. And that's because obviously we know that the CBN has been consistent with its intervention in the markets. And now that it's going to be selling at 410, 411 NAFEX and IFX rates, so definitely we are mopping up more liquidity. And because our forex inflows are not increasing as much as the demand, because that demand backlog is still there, we're going to continue to see that impact on external reserves. But the good news is that at least Nigeria is planning its Eurobond issue, so that should boost our external reserves to an extent as the global economy starts to recover also, and we begin to see unemployment rates drop globally. Migrant workers get more, they can remit more funds, and that also would contribute to our external reserves level.
Okay. What's going on in the commodities market, the prices?
Well, prices in the domestic commodity market, the main issue right now is the planting season and also insecurity. Those two issues are at the forefront of what is driving commodity prices, and we're going to see that prices will remain elevated in coming time. So yes, I know that the April inflation numbers, we saw that deep food inflation also declined, but the fact that food inflation declined, no, again, it's year on year. So what we're trying to say is that compared to last year, the pace of increase is slower, not necessarily that food prices are declining. And bear in mind, like for instance, now pepper and tomato are going for about 20,000, 30,000 per bag. Once we're in June, those prices are going to increase. So the planting season is definitely going to play a major role, and prices are going to remain elevated at least in the next month or two.
So store your house now.
Store your house, yes. Store your house.
All right, Damilola, thank you so much for joining us and for sharing your thoughts with us this morning. Enjoy the rest of your day.
And you too.
Well, we'll just take a break now. When we come back, more conversations, especially towards the MPC. Join us again.